Welcome. Let's take a look now at some of the events to watch out for the week starting Monday, the 9th of January. And we begin with the economic calendar and kicking off at 7 o'clock in the morning with industrial production in the German economy. And then 45 minutes later, we get French trade numbers. And later on, still the Eurozone unemployment rate. Kicking in with what's happening on Tuesday 10th, we begin with the overnight release of the British Retail Consortium's Retail Sales Monitor. It's a snapshot of some of the retail sales, and the important part about this particular report will be what's been happening over that all-important Christmas period. In France, we get industrial production numbers, and later on in the day, wholesale inventories, and the American Petroleum Institute crude oil weekly inventories as well out in the States. Midweek trading session, January the 11th, we start overnight with retail sales in Australia, and then later on in the day, the EIA weekly crude oil inventory. So quite a light Wednesday trade. On Thursday, again, it's Australia overnight with trade numbers and also the consumer price numbers and producer prices out in China, giving a snapshot of how inflation is faring in the Chinese economy. And later on in the day, consumer prices in the US. We've just seen the average hourly earnings produced by the Labour Department showing that this is coming in under 5%, bearing in mind consumer prices when last looked last month were over 6%. It's interesting to see how that dynamic is running. So we'll get a snapshot of what's happening in December for consumer prices in the States at 1:30 p.m. UK time, along with the weekly jobless claims. And for Friday the 13th, a day in bed for some people, preferring not to face the world on such a day, we get monthly GDP numbers out in the UK, industrial production and trade numbers as well at 7 o'clock in the morning. A little bit later on in the day, trade numbers in the Eurozone, and later on, still important export prices in the States. You get the Michigan consumer confidence numbers just after the US markets get underway, and later on, still the Baker Hughes oil rig count. Joining us now with the trade to watch out for next week is Axel Rudolph, IG's chief technical analyst. What's your pick of the bunch for next week, Axel?
Jeremy, the DAX 40 because of German industrial production and also Eurozone unemployment data. And technically also looks quite interesting because we've started off the year on a very, very strong footing and have risen all the way to 14,536. And basically, it will be interesting to see whether next week we can reach this resistance area between the November and December highs, between 14,598 and 14,606. So that'll be interesting to see whether we fail there and then maybe slide back again, or whether we can push through that resistance and retest the highs seen back in the middle of December at 14,677. So we'll have to see what will happen, because from a technical perspective, what is of note here is that the upside momentum has slowed down. We've seen two candles with lower volatility than in the previous days over the last 2 days. And we'll have to see whether today, after the publication of the non-farm payroll data, the DAX can push further upwards, or whether it will sort of stall in this area it's trading in now, around 14,500. Now, if next week the industrial production data does surprise negatively and the DAX were to come off a bit, or on the back of stronger unemployment in Europe, the support area to watch out for would be the late November low around 14,325. So that would be the first downside target in case of reversal being seen in this chart.
Okay, thanks so much. That's taking a look at the economic calendar. Let's take a look now what's happening corporate-wise as we see things beginning to pick up for 2023. There's always a lull over the Christmas and New Year period where people close out positions, they go away, they don't really bother too much about things. But now is the time to get back on board. And in fact, we start off on Tuesday the 10th with Bed, Bath and Beyond. Now, the third quarter earnings are doubtless going to be overshadowed by more information that the company is doubtless going to give about its position with regard to bankruptcy. We saw August last year that massive 350% increase over a space of about 4 or 5 days in the stock of Bed Bath and Beyond. For some reason, those Twitter share traders got hold of this and started to bid it up to levels that could only be dreamed of or dreamt of at the time. Since then, it's been pretty much one-way traffic, and the company earlier this last week just telling the markets that it's in trouble. And Bed Bath & Beyond reporting third quarter numbers, but I'm more interested in what's going on under the covers. Let's take a look at Wednesday, the 11th. Here in the UK, we get Topps Tiles first quarter trading statement as more and more people find going tough in terms of what they are doing with what little money they seem to be left over with now after having paid the heating bills. Topps will give us an interesting insight into whether or not we are still doing home improvements. That's a first quarter trading statement. We get a fiscal third quarter trading statement through from Sainsbury's, which of course includes that all important Christmas period. Where Sainsbury's, as we now know from anecdotal evidence, over-ordered on turkeys and meats because we saw the headlines that not just Sainsbury's, but Tesco's as well, having to sell down a lot of their Christmas stock when they'd over-budgeted or overstocked for a lot of goods for the festive period. Third quarter trading statement from Sainsbury's on Wednesday. Also the recruitment company Page Group on a fourth quarter number. Let's look at what's happening on Thursday the 12th, we get ASOS trading statement. The internet clothing retailer is out with numbers. There's been a little bit of an interest in some of these stocks recently because of the robust statement that we got through from Next just a couple of days ago, and ASOS riding high on the back of that, as indeed was Marks & Spencer, a trading statement there as well from M&S. All these companies reporting what's been happening over Christmas. Wetbread trading statement. Halfords as well. We get a trading statement as well for the third quarter from Halfords. Again, a company that sometimes benefits from the Christmas present giving season. And finally, for the week, Friday 13th, fourth quarter earnings coming through from the big banks in the States. And this is the start of the fourth quarter earnings season. What will it deliver? It will be a fascinating series of reports. On this occasion, it's banks. Also, you can see their United Health. So we get a snapshot from Citigroup, Bank of America, and Wells Fargo. For me, one of the interesting things is just whether or not the banks are now beginning to have to build some sort of provision for bad debts. And that is, of course, going to be one of the things I think that a lot of people are looking for in these numbers. But don't forget as well, the Fed's raising interest rates, and that's good news for banks. Let's catch up with Axel and see what he's got in his view on the week ahead on the corporate calendar. What's piquing your interest there?
I find Tesco very, very interesting. So we've got the third quarter trading statement out on Thursday, as you just mentioned, Jeremy, and the share price has actually risen very, very sharply at the beginning of the year by over 5.5% and reached the 200-day simple moving average at 241 pence. And last time we were trading there was back in August, where we failed around the 200-day moving average. So it'll be interesting to see whether, with regards to the trading statement, the Tesco share price can this time around break through that 200-day simple moving average and rise all the way back up to the September high at 252 pence and even perhaps to the August high at 271 pence, or whether it will once again fail around the 200-day simple moving average, in which case it's likely to slide back again towards the support line, which we have on this chart drawn since October of last year, and which comes in around the 225p mark. So interesting times ahead for traders with regards to the Tesco share price.
Okay, thanks so much. That's Axel Rudolph. You can catch up with Axel through the IG website and indeed on his Twitter account as well, if you want to contact Axel. And he publishes a number of publications throughout the week, giving his thoughts on some of the charts of interest. That's it from us. Have a good weekend. I'm back at 7:30 on Monday morning with the early morning call.